Markets are crashing. Is now tariff reckoning day. Today we'll break it down. My name is Paul Barron. Welcome back into the show. Let's just get started. I do want to thank our sponsor, and that's iTrust Capital, where you guys can get into your own crypto IRA. Very easy to set up. You can start going into a lot of different assets, and you get to manage all your moves within the platform. Make sure and use our link down below. It's going to give you a $100 funding reward just to get started. Always check with your tax advisor. Make sure it's a good fit for you. But these are some of the diversified things you can do to get started. Let's lead off the show with a clip. And this is a good one because it starts to break down a lot of what's happening around tariffs. And today is the day. Take a look.
Effectively, is this real? Does it get pushed again? Does it have teeth?
Well, Andrew, if April 2nd was Liberation Day, I think August 1st is the day of reckoning, so to speak. It's giving countries until the 7th to implement them.
But if you were a gambling man, do you believe that come next week, these actually will be implemented?
That is just the reality, whether it goes into effect right now or somewhat down the road.
Right.
All-time highs, Michael, and the bond market hasn't collapsed. The economy hasn't collapsed, and we've had hardly any inflation.
Inflation's ticked up a little bit, but not terribly significantly yet. It's probably not great to be complacent about it. That has to get eaten somewhere, and it's going to get eaten in part by consumers.
All right, so you have to look at this and wonder, is this the early stages of the inflation starting to take place? The Fed believes, Chair Powell specifically believes that is the case. I'll get to that in a second. But if you look at the markets right now, 805 million liquidated from the cryptocurrency markets in the past 24. I know that seems like a little in comparison to the overall size of the market, but in general, I think the big concern here is how does this play out on not only jobs, but also the issue around true inflation starting to come back in, because today is the day. If we actually see these tariffs hold place in through the next few weeks, we could see a big reversal quickly. I want to go to another clip here because this clip will get into what the data is showing, and it's not looking good. Take a look.
Got more economic data just crossing. Rick Santelli has that for us. Rick?
Yes, David. You have to go to March to find a bigger drop in construction spending. ISM on the manufacturing side. It's the 5th consecutive number in contraction territory. You have to go back to October of last year to find a lower number. 64.8, that'd be the lowest since February. It's 47.1, definitely light. The number has been now the 5th consecutive month, also under 50. Employment, kind of late, well below expectations. Sentiment, shall we? And that would be the weakest level just since March. Finally, inflation, maybe the most important aspect. 4.4 becomes 4.5 on the 1 year. So we see that that's going to potentially fuel a little bit more, maybe downside. Sarah, back to you.
All right, so a couple of points, a lot of indicators around the data. Jobs numbers came in soft. There was also a readjustment of jobs. All of that starts to move into where the markets are responding. Now, what's interesting about this, let me kind of go to this next tweet here by Kobe Easy. Market says the trade war has lost all credibility. So it's kind of the taco model here. S&P futures are down a mere 10 points. Remember, the last time we had a little bit more significant fall. That is not the case now. And the trade war has lost all of its shock effect on the markets in general. I'll show you some charts in a second, what it might look like. Yes, Bitcoin is trading at around 112. But the point is, does this stick around? Or is this the bottom right now based on just this August 1st deadline and all these tariffs going into place? I want to go to another clip real quick because this one will get into more of a tariff reality check. You guys need to pay attention. Take a look.
Hey, Governors Waller and Bowman continuing that tradition of explaining their dissents on the Friday after the meeting. They're both saying why they wanted or preferred a quarter-point rate cut. You also see, interestingly, in Bowman's comments, who said, if you take out the tariff effect, we're at 2.5% or lower PCE inflation. So she's telling us there's 0.3 percentage points at this point of inflation from tariffs.
It's not on what they're selling, it's on what's coming in. So if their markups are 300%, 400%, it's only on the wholesale price.
Whose markup?
But if you're talking about grocery stores where your margins are 1% to 2%.
Nothing.
You should cut.
Except that clearly the president thinks that actually he's about to create a problem.
I think that the problem will pay benefit.
All right, so from that clip that we were just talking about there around the dissent, one of the things you've got to look at is what is the real effect on the market in terms of tariffs and companies that are going to be affected the most. Apple is probably, I would consider, one of the biggest because remember, they moved a lot of their manufacturing out of China, moving into India, also projects happening in Vietnam, both of which have been hit now with higher tariffs. This starts to affect Apple in a very big way. Take a look at this clip.
iPhones are made in India now, and they got a 25% tariff rate. Macs and Apple Watches now made in Vietnam, and they've been slapped with 20%. It'll cost them $1.1 billion in the September quarter. Is Apple absorbing some of this tariff cost?
That obviously it does not bode well with their customers, loyal customers.
Tim Cook estimated 1 percentage point of the 9.6% sales growth attributed to the customers that were front-loading ahead of the tariffs. How do you think that with the next iPhone release, which is usually in September, how is that going to be impacted?
Apple could increase slightly. They would expect Apple to also be loyal to them and not increase the prices.
All right, so as you can see, whether or not Apple is going to play this out and charge an increase to American consumers, because remember what they were talking about in the clip is that a lot of companies were actually front-loading a lot of the acquisition of Apple's products. Now that's starting to change, and a big key there is Apple launches their next iPhone in the fall, and all this is leading into the biggest holiday season of the year, which of course is around Christmas, and that of course will play into all of this. Now that we place that into consideration, that companies are actually being affected, which means we will see some inflation starting to translate into consumers, here's what Trump is doing. Trump says the Fed board should assume control if the Fed Chair Powell continues to refuse to cut rates. He is all over this guy right now in a huge way. And I don't know if you guys, I'd like to know, in your opinion right now, just drop some comments down below. Do you think that the Fed should cut with jobs starting to slide, but inflation looking as though with these tariffs going in place that it's going to edge up? How will the Fed be able to manage that? Because that essentially is stagflation going forward. What is stagflation? Well, if you look at it, in April, this is what Chair Powell was talking about. The Fed chair warned that Trump's administration's new tariffs were significantly larger than expected, with likely effects that include higher inflation and slower growth. Both of those scenarios do not play well good for economies. In many cases, that could also spiral into recessions. But the point is will Trump back off of this in any way? If he starts to reduce any of these, maybe the market will go back to its potential. So it is a little bit of a double-edged sword that is playing into it. And if you look at polymarket right now, after the jobs numbers came out, it reversed a lot in terms of a potential 25 basis points, which is now at 69% in the September meeting. So 69% is a huge move up from where it had dropped to, which was around 35%, which was after the FOMC meeting. So do you agree with polymarket right now is that we've seen that big of a push just because of the jobs numbers coming in so soft, tariff numbers, I would say getting ready to hit? This is the problem that I think a lot of people are not completely thinking through. This may actually be worse for the markets as we start to see us go into the fall. But let me know if you guys agree with polymarket down in the comments. Other things I want to hit on: JP Morgan's squeeze sentiment indicator recently at its highest level since since 2021. Of course, that was the meme mania. And I think right now we're stuck at a point where either it's going to have a reckoning down in terms of sentiment in the market. And if you look at crypto fear and greed right here, it has started to soften quite a bit over just the last little bit. I'll kind of zoom in on that. So really, if you look at where it had clipped up to, that was on July 17th. We were at a 71. But if you go all the way back here into last year, this was pre the nice little run that everybody had, we were at 88. So again, softening and delaying the altcoin season for sure. Let's take another look at this next clip, which will get into Tom Lee, and he's going to talk about whether the markets are ready to boom or not. Take a look.
Brian, we've seen markets get frothy and correct. I've been covering markets for 35 years. So, I went through 99. We went through 2019 and 2022 and the 2021 top that was painful into 2022. And I'd say that signs of a top are really reckless use of borrowing at a time when cycle indicators are at a top. One thing to be mindful of in 2025 is that the ISM manufacturing hasn't stayed above 50 for 29 months. That's the longest stretch in history. So we know businesses have been ultra cautious. Despite what people say is froth, I mean, maybe the Robinhood community is quite enthusiastic, but in a general sense, because Fundstrat has 10,000 RIA clients and over 400 hedge funds, our community of clients is not that enthusiastic. I think it really does sync up with the $7 trillion of cash that you see. People are cautious, and when people are cautious at the top, as you know, that's not bell ringing. That's generally more mid-cycle.
Yeah.
All right, so to his point, mid-cycle versus bell ringing, and I do agree with that, with the amount of money that is on the sidelines still. And I talk to money managers all the time, and they have not deployed. They have not deployed into digital assets. So if we are in a mid-cycle, is this going to happen again? If you look back at the tariff date, a lot of this starts to go in these cycles, but tariffs have been a pretty much catalyst of where the market has responded. If you look at the two dates here, this is the one April 2nd, this is Liberation Day. Tariffs are starting to be played into the markets. And what Bitcoin did from right there on the 2nd, it dropped around almost 12, 13% on that dip. But then right after that, over the period of what was that through April 9th, all the way to this top right here, almost 50% gain. So are we in that same cycle of, kind of the taco trade right now of Trump pushing the market, as we've seen here with August 1st? And remember, we thought we were going to see a lot more activity, including the Genius Act going through, but also the market structure. All of this was supposed to be done by August 1st. Genius Act, good, yes, but the market structure not in place. Maybe there is a lot more pain than what people are expecting. Stick around. We're going to be covering this a lot over the next week or two, because I think this is a very key time on how the markets are going to react and whether or not this is a good time to start to enter into positions, or are you sitting on the sidelines waiting for the next move? Get into the Diamond Circle. It's a great place to get additional content. We leave the link down below. It's absolutely free to join. Follow me on X @Paul Barron. We'll catch you next time right here on The Paul Barron Show.